Bull trap this. Bears are getting smashed. We're going to 10K Bitcoin. Truth is, no one knows exactly. However, keeping tabs on the macro environment, you can definitely increase your chances of making that extra 5,000 or whatever your investing goal is. And this week is the epitome of macro. We got interest rate announcements from the USA, England, Europe. We have unemployment rates announcements along with non-farm payrolls. We also got a bunch of earnings, tech earnings. We got Apple, Meta, Google, Microsoft. So buckle up, buck-a-roo, and let's jump in and see what's going on. It seems like everybody and their dog's been paying attention to what's going on in the macro environment. Every single release from the Federal Reserve has been making just huge waves. And today, is no different. This week is very important. Expecting volatility, and we've seen the volatility come and go for sure. I mean, just look at the S&P. This is just on the, couple-day chart here, up and down and up and down. We even hit the 200-day moving average. But listen, it's all eyes on the Federal Reserve. This guy makes or breaks what's going on in the market. If you follow any sort of economist, you'll kind of see this kind of take. It looks like the Federal Reserve de-risk is protected, which is happening. A bunch of people taking some profits, volatile week ahead with payrolls and FOMC, the two most important data points for all of this. But what does that mean, and how do we plan for that? Well, we'll jump into that in a minute here. Let's take a look at the calendar. So on Wednesday, we've got the FOMC. So they actually start the minutes today, which is Tuesday. And then tomorrow, they're going to have their announcement on the interest rates, which is expected to be 25 basis points increase. And then they're also going to have, the conference, right? So that's where they come in and ask a bunch of questions. And everyone just sits there and looks like this. So then we got the Facebook earnings or Meta earnings. And then we have also the Bank of England interest rate announcements as well as the European. And everybody's looking at those. And then we got Friday, which is the two big things that everyone's going to be looking at, is the non-farm payrolls and the unemployment rate. So what does that mean, and why do we do that? What does it matter? So first things first is the inflation rate. The Feds have been just looking at increasing interest rates to drop inflation, because we've hit some record high inflation. And you can kind of see that down here in trading economics. The annual inflation rate in the U.S. has slowed for the 6th straight month. So that's good. Inflation seems like it's under control. But we just don't want to go back to hiking. So we don't want to increase the rates more than we've been dropping them already. So inflation isn't number one anymore, I would say. This article by the Wall Street Journal, dude, I guess he's kind of the Fed whisperer. Yeah, me too. But he's pretty on point with what his articles kind of say. So what do? We take notes. But at the end of his article, it's a pretty long article. He basically says if wage growth stays high as it has been, they will have an inflation problem. So remember, inflation goes up. We have to increase the rates so people stop buying, decrease demand. So it's kind of like a transfer of money like that. But what happens is inflation is high, so people are getting raises, right? And then so people get increase in wages, and now everybody's got more money to spend, and inflation can keep going up. So those are kind of the three main points, and let's take a look at some of the details into what goes on behind that. As well as how does that affect the crypto market? How does that affect stocks? How does that affect the interest rates? So one of the given pieces of information is inflation's going down. And why is it going down? Well, the assumption is that it's going down because interest rates are going up, everything costs more there's no free money. So that makes sense. Okay, good point. So the next big thing is non-farm payrolls. So what does that mean? The U.S. economy last month, we added 223,000 jobs in December 2022. This has been the least since December 2020. But the one thing to note is once we kind of start delving deep into this is that the biggest increase in jobs, in payrolls, is leisure and hospitality, healthcare, and construction, where a little employment changed in manufacturing and government. So what they're saying is that there's potentially more jobs out there, but they're not as high as paying jobs, which decreases the revenue that the government gets. Yeah, a lot of stuff, a lot of tinfoil hats, this and that. Everybody's confused. Me too. But basically what you're saying is there's less money going into the public, which helps the inflation coming down, which is what the government wants to see. The Feds wants to see, not the government. However, average hourly earnings for all employees, U.S. non-farm payrolls, have increased by 4.6% from a year earlier in 2022. So, they're still up, but they're trending down. So this is what we want to see. Unfortunately, does hurt the pocketbooks of your average citizen. But this is like, I don't know how you want to put it. If we keep inflation going up, we're going to get hit even harder. And the thing to note here, it was the smallest annual growth in average hourly earnings since August 2021. Unemployment's always something to watch too, because it does affect how much money is coming into the government through income tax. It's been pretty steady Eddie. That's what we're looking at. People are max shorting S&P. So how do we position ourselves? So what we're looking for is non-farm payrolls. That's what matters the most. I think the Fed is probably going to be close to a non-event. Probably there's going to be a lot of talk and narrative around emphasis on the wage growth concerns by the Fed. So I think a lot of people are guessing 25 basis points hikes. So they want to keep the interest rates high for a little bit longer. But if wage growth doesn't drop, they're going to start hiking more. They're going to keep it up, right? It's probably going to be, I'm going to guess that the Feds is going to say that we're going to keep 25 basis points. We're going to evaluate how this changes, affects all of the markets and inflation and wage growth, and then utilize all that new data that's coming out to make a better informed decision later on. So what are we seeing? We're going to see volatility. We're going to see wicks up. We're going to see wicks down. What does that mean for NFTs? NFTs don't like volatility. NFTs like when Ethereum's on a flat kind of range, crab walk across the side of the chart. So you're going to see NFTs probably go down a little bit. There's going to be some new things that pump. It's the open edition meta, blah, 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 all that type of stuff. But what we're going to do is you just got to make sure that you take profits, man. You see some big, strong ups. Take your money out. I'm the worst at this. I just let it sit because I'm not a trader. But starting to take a little bit more interest in what the macro environment does and how it all works. And that's basically what we're seeing. So, pay attention to this week. We got a lot of earnings. We got a lot of Federal Reserve information coming out. And we also got some big information points coming out with the non-farm payrolls and the unemployment rates. So keep an eye out on that, and happy trading.